Hey, it's Danielle. Welcome to the free video. So today is December 30th, and it's very interesting because tomorrow is going to be the last day of the year. Now, normally what can happen on the last day of the year is you do see a little bit of selling because in the stock market, people do not want to hold losing positions going into the new year because they want to take a tax loss on them. Now, I think that makes a whole lot of sense, and especially for me as someone who's a regular trader, I'm definitely going to be cutting a couple of my stock positions as well for that reason. But when you look at this in the context of the overall market, what does that mean? Well, first of all, like we've been talking about for basically forever, this stock market has been extended to the upside. We can see that we have an extension up here with a target at about 32.54 that has basically defied all expectations. We've been looking for a pullback and we've been trying to quantify the pullback. And for me personally, I think the 8 EMA, which we're hitting right now, makes total sense. But the 21 EMA looks a little bit more inviting just because of the strength of the market that we've seen, especially if we start to see more of a flush going into tomorrow. It would make sense that tax loss selling plus emotional selling would equal a larger pullback to maybe 31.86 or about. Now it's still another 40 points lower or so, but that leads me to my next ticker. Because if you know me, you know that I love to buy the dip. Now, I can't really tell you to buy the dip when the dip has just begun, which is why I started with that overall analysis. But I can give you a list of tickers, especially Honey Badger S type tickers that are incredibly strong and will likely rally after the pullback. The first one that I want to focus on is CMG. CMG has been very strong. It's definitely been Phoenix-like. It has rallied higher after hitting the 200 simple after last quarter's earnings report. It's recovered and it also has a squeeze. We have a daily squeeze on this ticker and we also have a lower time frame squeeze as well. So like I said at the beginning of this video, I don't necessarily want to buy it right now. But if we get a little bit more selling, a little bit more of a pullback in this overall marketplace, I would love to buy this around 820, and I would love to try to trade it into around 850 or so, especially going into January. I think that the longer term target on CMG is going to be 900, but for this trade in particular, I'm just looking for a shorter term time frame trade with a nice, easy target for something that's been holding up really well in the context of the overall stock market. The next one that I want to look at is ROST. So ROST has also been something that's been defying expectations, and especially today, where you had a bit of a low and slow day, you have ROST that was up over 1%. Now, I've been in this trade in the trading room, or no, actually in the mastery program for I think the last 2 weeks. And we've been waiting and holding through this consolidation, but just finally we're seeing volume coming into it. So while it has already taken off just a little bit, I still think that you could target 120, about 122 with a butterfly. And if you do get that overhead breakout, then that might be a good potential for a day trade. So basically right now, as the market's pulling back, I'm focusing on a couple different honey badgers. Of course, in the previous videos, we've talked about the different short squeeze tickers that I'm looking at. But my main goal here is to identify any type of market pullback and focus on that going into January, looking for the January trade. So I want you to check out my page right here. This is the January special that I'm working on. You can go to simplertrading.com/star, STAR, because I'm going to be doing a very special live trading session this Thursday, January 2nd from 4 to 6. It'll probably go a little bit over, but I'm going to be talking about how I get ready, plan for the January run in the stock market, how I trade it, and how I make money off of it. So what I did was I put together a compilation of the tools that I use to make money. And if you don't know, look at January for the last 10 years in the S&P, and what you will see is that over the course of the last 10 years, 9 out of 10 times January traded higher. This is something we love to trade in the options market, something that we're going to be trading at Simpler Trading. And if you want to know how to do it, go to simplertrading.com/star, sign up, and I will walk you through this run. The best thing that can possibly happen for us right now as options traders is that the market can trade lower so that we can get in at a discount on a lot of these tickers and trade it higher into the rest of the month. Also, I did want to let you know that John is having his tax loss harvest class tomorrow. So if you're going to be around, make sure you check that out, where he's going to be focusing on some of the tickers that do tend to trade lower on the 31st, but bounce into the beginning of the year. I hope you have a fantastic rest of your day. And beyond that, I will see you tomorrow in the trading room.